Hello everyone, this is Marshall Gittler on behalf of Claws and Horns, bringing you the outlook for the week beginning June 19th. The market will probably focus on two major themes this week. First will be the normalization of central bank policy, or not. We've had several central bank meetings that moved in that direction recently. Of course, the Fed did hike rates further, but also the Bank of England not only voted against hiking by a surprisingly narrow 5-3 margin, but also the ECB removed its easing bias, and a senior member of the Bank of Canada strongly hinted about an eventual rate hike there. Listening to these central bank bankers, the general theme around the world seems to be that central banks are gradually returning to normal after the extraordinary experiment in monetary policy that we've seen for the last several years. We'll get more information about the Fed's plans when New York Fed President Dudley speaks on Monday and Fed Vice Chair Fisher speaks on Tuesday, among other FOMC members. Well, at least normalization of central bank policy is the feeling we get outside of Japan. Although there was a Bank of Japan meeting during the week, there was no mention at all of an exit strategy there. That leaves Japan as the main exception among the global central banks. I think we're likely to see further weakening in the yen as investors with carry trades shift into the yen as a funding currency. Now, we'll get more indications of the normalization trend during the week when the Reserve Bank of New Zealand, or RBNZ, holds its meeting on Thursday morning, New Zealand time. The RBNZ also seems to be an outlier, although they never went in for the extremely low rates that other central banks did. This graph shows how the market's estimate of the likelihood of a rate hike at various points over the next 2 years has changed. As you can see, 3 months ago, the purple line, the market had been pricing in almost a 100% chance that the RBNZ would hike rates by next March. A month ago, the green line, that had been pushed out to May, but the market still saw pretty much a certainty that it would eventually hike. Now, the red line shows that the market only sees a 70% probability of a hike, and that's by next June or later. After the disappointing Q1 GDP figures from New Zealand, I expect the RBNZ to take a dovish view again and for the New Zealand dollar to weaken slightly. The second major theme for the week will be European politics, especially with regards to the UK. I'm including Britain in Europe still. Even if it leaves the EU, it's still geographically part of Europe. The week starts off with the beginning of the long-awaited Brexit negotiations between the UK and the EU on Monday. Now, obviously I don't expect to see anything substantial come out of the first meeting, but it could set the tone for the time being, whether the negotiations will be friendly and cooperative or hostile and antagonistic. There's an EU summit meeting on Thursday and Friday that will probably result in more Brexit talk as well, now that negotiations are formally underway. On Wednesday, UK politics will again be in focus with the Queen's speech, which opens the new session of Parliament. The speech sets out the government's priorities for this session. The key point here is that several days after the speech, Parliament votes on it. If the vote doesn't pass, then the government falls. At the time of writing, Prime Minister May has not yet secured the agreement of the Democratic Union Party of Northern Ireland to cooperate with her government, and so she doesn't yet have a majority in Parliament. The vote, which probably won't take place during the week, is therefore not the mere formality that it usually is. EU politics will also be in focus on Monday morning as the market digests the results of the final round of voting for the French National Assembly. It's widely predicted that President Macron's Republic on the Move party and its allies could win as many as 3/4 of the seats, giving them an overwhelming mandate. That could be positive for the euro, although it's probably well discounted by now. As for the economic data, there's surprisingly little on the schedule for the week. The main point of interest will be the preliminary purchasing managers indices, or PMIs, for the Eurozone and the US on Friday. The EU is in an accelerating expansion led by Germany, which, as you can see here, is an outlier of high growth, while the US expansion is slowing. The market will be interested in seeing whether these trends continue. If they do, it might justify a higher euro-dollar. Otherwise, the major indicators out during the week are largely for Canada. Their retail sales were announced on Thursday and CPI on Friday. No forecasts were available at the time of writing. Inflation is currently in the lower half of the Bank of Canada's band, and so there's no urgency to tighten policy. But as long as it remains within the band, the possibility of tightening remains. The figure could therefore be bullish for the Canadian dollar. This is Marshall Gittler for Claws and Horns, wishing you good trading.